Hello everyone, my name is Ben Decker. I'm going to do a live stream here, go over some earnings plays for today. Tomorrow morning I'm going to do a live stream as well. I'm going to show how I do the 0 DTE trade, and then also I will manage these earnings trades and look to put on some new earnings plays tomorrow. So I wanted to jump on here today, just give a quick rundown of what I look at for earnings, see if there's any potential plays for today, and also wanted to make sure everything goes smoothly tomorrow, so I wanted to do a test run here. So today is Tuesday, May 25th. I get my earnings news from Market Chameleon. It's free to sign up, and every day I get an email and it has this data in it. So Market Chameleon sends out a list of the earnings plays for the day, breaks it down by symbol. The date would either be today after the close, which is AMC, or tomorrow morning before the market open. Either way, today would be the last day to put on any options trade you want for earnings. Tomorrow is when the event will have passed. So Market Chameleon also gives you the implied move and also the actual average move over the last 4 quarters, and then it tells you if the implied move is greater or less than the actual move and a magnitude. So generally I like to sell premium with earnings, so I like to see big green numbers. Red numbers I usually try to avoid. So for example, ZS I will be looking to avoid. PDD, that's one of the stocks I'll be looking at. This is saying there's a 4.2% less implied move compared to the last 4 quarters, so I'll be more hesitant on that one. But I will be looking at PDD, JWM, which is Nordstrom, DKS, which is Dick's Sporting Goods, Urban Outfitters, and INTU. So I'll be looking at these 5 stocks for today for earnings. And I'm just going to go through how I look at earnings and determine if I want to play them or not. My account is roughly 25,000 for this account here that I'm going to be showing. So that 25,000 will dictate which strategy I select. If you have a larger account, then you can be a little bit more aggressive with your earnings trades. I'm usually a little bit more conservative. For me, these are usually one-day plays. So whatever happens tomorrow, I'll take off the trade 9 times out of 10, even if it's a loser. If it's a stock that I like, or an underlying that's liquid that I don't mind being in longer term, I might manage the trade. But for today's earnings, I'll bring this back. None of these stocks I want to be in long term. So if I put any earnings trades on today, I'm going to look to close them first thing tomorrow morning. So let's get started here. We'll start with PDD. I'm using the tastyworks platform here. So I'll type in PDD. It's a $130 stock. So I'll go to the options trade chain here. So for a $130 stock for my size account, I'm going to be doing defined risk. If I do anything, I can't do any short calls, short puts, And first I'm going to open up the weekly, the 3 days to expiration. And I'm just going to look at the liquidity. So what I'm looking for is the bid-ask spread. So these are generally 10 to 20 cents wide. That's a little bit wider than what I usually like. And you can see the volume here. There isn't really that much volume. If I compare that with open interest, you can see there's really no open interest in these contracts. So that also is a little bit of a deterrent for me to play this. So I guess that plus this 6.7% less implied than actual, I also don't like. So, or actually 4.2, sorry, I have the wrong thing. So 4.2%, still below the actual move over the last 4 quarters, so that's also a deterrent. So I'm going to pass on PDD. So the next one here, I'm going to look at JWN, which is Nordstrom. And again, I'm going to look at the weekly here. These are also pretty bad. 30 cents, 20 cents. So those are pretty wide. I'll look at the monthly here, the June 18th, to see if it's any better. And here you can see there's 8 cents, 10 cents, but then there's some that are 20. Volume, again, is really low in both the monthly and the weekly here. The weekly is a little bit more options traded today. Reason that you would go into the weekly option is over here we have the implied volatility, and you can see the highest percent is in the weekly because of the binary event for earnings. The monthly is going to be inflated, but it won't be as much. And the back months here are in the 60s. It's kind of hard to gather exactly what the back months percentage is, just because Nordstrom is so illiquid. But for earnings plays, you might have heard of volatility crush or vol crush. And basically what that means is after the earnings event happens, after the move happens overnight or before market open, this 70% is going to drop closer to what these back months are. So for Nordstrom, you would see this 70.6 go down to more in the mid 60s, I'd say, so maybe 65. So that tells me there's about a 5% vol crush on here. So if I were to sell a strangle, I'd probably do the 31. And these are really wide. Yeah, I don't like these at all, but maybe the 43. So the 31.43 strangle. There's a 5% vol crush here, I think. So if I make one of these columns Vega tells you how much this option is going to increase or decrease based on a 1% volatility move. So this 43 call is going to decrease by 3 cents for every 1% in vol crush. So that means if there's a 5% vol crush that I'm estimating, this option is going to decrease by 15 cents if there's no move from earnings. So if tomorrow the stock opens up at $37 and I sell this call, I'll make about 15 cents from the volatility crush. And same thing on the put side. This is a 2-cent Vega. So times 5 is 10 cents. So this option will decrease by 10 cents. So if I sold a strangle, this would decrease by 10. This would decrease by 15. That's 25 cents or $25 that I'm looking to make overnight. If I sell the strangle, if there's no move, to me that's also not really worth the risk. I don't want to be in Nordstrom for the long term. So moving on to the next one, DKS, Dick's Sporting Goods. I think this one's going to be similar. So $84 stock. This one is kind of on the fence for defined risk or undefined risk. Nordstrom Rack was in the 30s. That one I would have done undefined risk because it's a lower price stock. They're easier to manage. Easier to stay small, I should say. For earnings, I like to stay extra small. I don't, unless it's a stock I'm looking to play long term, I always make sure I'm extra small for earnings plays. So DKS, let's look at that one. So going into the option chain here, you can see your IVs. So this one, the monthly is 59, the back months are 45. So this one has a little bit more vol crush, maybe 10 cent or 10% vol crush in this monthly option. So if you look at the monthly option, these markets are a little bit better than the last two, I'd say. So if we look at volume, still there's very little volume. Normally the earnings events, these are big volume days. So if you have a stock like Tesla or AMD or one of the more popular, these will be in the thousands. But this one I might play. If I look at Market Chameleon here, Dick's Sporting Good, the implied move is 1.6% above the actual move over the last 4 quarters, so that's good. So I might do something in here. And let's look at the weeklies, see if that's any better. That one's not really any better for liquidity. About 10 to 15 cents for both of them. So I'm going to start out with the monthly here, the 24-day. The reason I would go out to the 24-day is it's less, the move affects the options less. If you do something in the weekly here, it's going to be instant pain or instant gain. Usually it's either you win or you lose. There's not much you can do about it. Monthly, there's a little bit more of a buffer. So I'm going to start with the monthly and see what we can get here. So actually, let's back up here. So on the weekly move here, it's 100% implied volatility. The 613, that's the expected move for the week. Today is Tuesday, so maybe the earnings move is, say, 75 or 80% of this move. So let's say that the earnings expected move overnight is $5. So the expected move in DKS is between $80 and $90. That's what the options market is pricing in. So if we went to the expected move, that's 80 and that's 90. When I go out to the monthly, I like to go 2 times the expected move. So if the expected move is $5, I'll go $10 away. So I'll go to 75 and I'll move this to 95. And that's 2 times the earnings expected move. We're collecting 220 in credit. Buying power is only 850. That's not too bad. The bid ask here is 15 cents and 15 cents, so pretty wide, but I'll put this on for earnings, I think. Let's estimate how much we can expect to make. So let's say this goes down to 48% tomorrow, so that's a 10% vol crush. If I change this back to Vega, the call here, the Vega is 6 cents. So this 95 call should decrease by 60 cents if there's no movement. And this is also 6, so 60 cents. So best case scenario tomorrow is I make $1.20 or $120 if Dick's Sporting Goods doesn't move. I like that a lot better than the Nordstrom where I was looking at a quarter. So I'm going to go ahead and put this on. I'm going to have to give up probably a nickel to get filled. I'll go down 3 cents and see if I get filled here. And then I might just, so there we go. And I'm going to give up 2 cents. So I got price improved. So then next one is Urban Outfitters, URBN. This is a $34 stock, so similar to Nordstrom. Implied volatility for a stock. If it's a stock, I always want to see the implied volatility in the back months to be at least 30%. If it's lower than 30%, then there's just not a lot of premium, and I like to pass on those. But here, like the other stocks I looked at, it's above 30%, so I'm okay with looking at it. So we'll go into the weekly here, and we're at 20 cents wide, pretty much across the board. Go to the monthly, should see about the same thing. Actually, these are a little bit better, 5 cents, 10 cents, 15 cents. Somewhere, let's look at the volume. Volume is non-existent. A little bit better in the weekly, but still pretty low. There's none in the thousands. This would be a strangle candidate for me, with it being a lower price stock. With the weeklies being so illiquid, I'd probably go out to the monthly. And let's do the same setup like we did before. So the weekly expected move is 265. So the earnings move is, say, $2. So on the upside, let's call it 37. And on the downside, call it 32. So if we go to 32, 37, that's your one-time expected move. If we want to go 2 times the expected move, we'd move this $2 out to 39. Move this $2 down to 30. We're getting 129 for $1,034. Rule of thumb that I like to do for strangles is your credit should be at least 10% of what your buying power is. Here it's right on the cusp. Since Urban Outfitters isn't a stock that I'm going to want to be in long term, I'm not going to put this on. If I wanted to decrease this buying power efficiency, I could make this into an iron condor. To do that, I'd probably go $3 wide. And here you're getting 80 cents, but you're only using $220 in buying power. So this might be something that you put on if you want to get into this. With an iron condor, the earnings move is the Greeks are not going to be as affected because you have this long option as well. So what I mean by that is if we look at Vega, there's a 3-cent Vega on the 39 short and a 2-cent Vega on the 42 long. So net, your Vega is only 1 cent. So that means if there's a vol crush of 10 cents, you're only going to make, if there's a vol crush of 10%, you're only going to make 10 cents on the call side. Instead of if you just sold this 39, it'd be 30 cents. So the iron condor limits your vol crush. And same thing on the put side here. It's a 2-cent Vega and a 1-cent Vega. So net, it's only 1 cent. So if there's a 10% vol crush, you're going to make 20 cents on this instead of 50 cents if you just sold the strangle. So there's always takeaway or pros and cons to each strategy, defined versus undefined. So with that said, I'm going to skip that one. Last one on the board, INTU, not a stock that I trade. $440 stock. This is for sure defined risk for me. IV percent is right at 30%, just a hair below. So from what I said before, I'm going to not even look at this because this is below 30%. It's a $440 stock, but there's only a $13 expected move. Just for comparison, 5% is $20. So, I mean, they're only expecting a 2 to 3% move from earnings, which you see 2 to 3% easily with a stock like Tesla or AMD. So I'm going to skip over this. If you want to play it, I'll take a look at this here. Go to volume. So kind of like the other stocks, there's not much here liquidity-wise. Bid-ask is horrible. 40 cents, 50 cents. But this is a much larger stock, so that's expected. But again, the volume is not in the thousands, so not something that people are really going to play. Also, if you look at the strikes, it's $5 wide strikes on the call side. It looks like $2.50 on the put side. So if you're putting something on here, be aware of that. Guessing the monthly is going to be similar. Yep, so monthly $5 wide and $2.50 down to $4.15, and then it goes to $5 and $10 wide. So those were the stock earning trades for today. So Dick's Sporting Good. If I go to the trade page, Tastyworks will give you the date and a little arrow with this bell. So this means that earnings are May 26th before the market open. So earnings will be tomorrow morning. So you won't see what the move is until then. If it was after the close, it would be May 25th, and the arrow would be on the other side here. So I'll look to manage this position tomorrow morning, and also go through the earnings for tomorrow again, and also put on the 0 DTE SPX trades that I normally do. I normally do the Iron Condor, but tomorrow I'll do both just to show them live on here. So if you can join me, that'd be great. Otherwise, this will be recorded, or that will be recorded later, so you can catch it afterwards. So if you have anything you want to see in the future, just leave a comment in the video below, and if you would hit like and subscribe, that would be great. And thanks for watching.